Welcome to Beyond Bitcoin, a podcast about all things digital assets, the global communities they are creating, the generations that are using and investing in them, and the challenges faced by the nations that are seeking to regulate them. The content of this program is not to be taken as investment advice. My name is Deryck Graham. I'm the CEO of Portal Asset Management, and my co-host is Nitin Gaur, Director of IBM Digital Assets and CTO of Portal. So good evening, good morning, good afternoon, wherever you are in the world. Welcome along to Beyond Bitcoin. And of course, today I always have my friend and associate with me, Nitin Gaur. Hello, Nitin.
Hey, Deryck, I'm back. I'm back from London. I missed the podcast last week, but I heard it was terrific. Great feedback. So nice job.
It was such an exciting time. We hardly noticed you were missing, actually, Nitin.
Ouch, that hurts.
So, of course, we've got a special guest today, and thanks, Nitin, for introducing us along the way. Greatly appreciated. So, Alex Nascimento has joined us today. And if I may, Alex, I'll just give a little bit of a preamble to you so that the audience has got an idea of quite what you've done to date and how you've got here, because it's impressive. And so we see you've done an MA and an MBA, and you lecture at UCLA on blockchain, where you focus on blockchain business applications and security tokens, which I think is going to be the conversation today. In addition to the role, you're also the managing director of 7CC Blockchain Investments, and you say it's a company that focuses on supporting and fostering the blockchain industry. But somehow or other in your spare time, you've managed to write a book called The STO Financial Revolution, uncovering regulated and compliant fundraising via blockchain. So I've got to say, this is a topic we've discussed a number of times along the way, and that is the relevance of the current regulations to the current technology that exists. And, in this realm, there are so many doors to enter this space and so many ways of getting into it. Maybe you could just tell us how come you've entered this space, which door did you come through? And what made you arrive in this world of security token offerings and, your support with navigating regulations that you're doing?
Yep, fantastic. Well, Deryck, Nitin, pleasure to be here. Thank you so much for inviting us. It's always a pleasure to share the stage with Nitin, and a pleasure to meet you, Deryck, over the web. I've been across the globe with Nitin on some different panels, so always a good chat. Great. Personally, sure not to use our time much more efficiently than talking about myself, but I was teaching at UCLA a bunch of different strategy and tech-related investments and marketing classes. And I was a tech investor, invested in startups and things of that nature. Was a member of Tech Coast Angels, which is the largest angel group in the US. And started, met some folks in the Silicon Valley that were working around the Ethereum and the MetaMask project, and following their lead, started investing in early token projects, not to call them ICOs, because that's not a good word.
But they were at the time.
Obviously, yeah. And just like being very candid, obviously I didn't do anything special. It was just like the right time at the right space, and, had some incredible returns that some of my peers at UCLA and at that Coast Angels were surprised by. And I guess everyone was surprised by in 16, 17 about the returns that these projects were doing. So at that point, mainly led by a very senior faculty at UCLA, George Abe, who was my professor when I was there doing my MBA, kind of had this insight that UCLA, as being one of the universities that fostered the internet, should have a blockchain initiative. And early 17, I was frankly one of the very few people in the faculty group that was interested into the topic and knew about the topic. So we created the curriculum. The curriculum today is a certificate that people all over the world can join. So you don't necessarily need to be a full-time student at UCLA. Highly recommend you search blockchain UCLA. You will see all the information. And with the boom of blockchain, it's I think it's a differentiator if you can get a degree.
Yes.
On the investment side, we continue from 16 until today. We saw crypto winter. We saw Bitcoin at 3,000. A lot of my friends thought that I was crazy, like the nut professor. What are you doing with your life? You know, and we're happy we saw the other end. And our focus, mainly in 2018, when the SEC said no more ICOs, this is unregulated securities. Together with the university and as an investment firm, we decided to not pivot, but focus on how to do this from a regulated point of view. And in that journey, I had the pleasure to meet Nitin, become an ambassador of the GBBC, which is also a group that focuses on regulated approaches and institutionalization of crypto. But enough about me. Let's talk about what the audience would like to hear.
Yeah, I had a question on this, Alex, and I think we've briefly chatted about this earlier. Is in the industry, and I think US, as you know, is still navigating through this entire complex set of regulatory and compliance challenges. And we oftentimes use the term regulatory arbitrage, which is basically ability for individuals, because we're dealing with truly global platforms, and ability for us to be able to move the assets seamlessly with little controls across borders. It makes it interesting because you may have a regulatory challenge in one jurisdiction, but you may have a clear-cut definition in different jurisdiction. We've seen that with MiCA in Europe. We've seen that with Japan. We've seen some of the payment bans that we have recently seen, and of course, you have the Great China ban and the Russian ban that has been recent. Any perspective on navigating through that? As both as an investment professional, but also as a blockchain professional, and having seen the industry from ground up, and we all have been there from ICO phase, and there is certainly an essence of investor protection, which is the entire intent and the reasoning behind regulation. Just love to sort of peel that onion a little bit more in terms of how do you see that as a global vantage point from your perspective.
Yeah, no, that's a very good question. So I think that we try to break it from our investment approach into obviously being regulation prone first. So we don't get involved into projects that are outside the regulatory boundaries or that don't pass our compliance. A little bit about how we take that approach is you got to break it into kind of like two parts, right? One is, where is the company that's issuing the token residing, or where are you issuing the token from, and what you can do in that jurisdiction. And I will give you a very interesting example. So I'm speaking to you guys here from Sao Paulo in Brazil, which we're speaking with some of the largest banks here that are all very crypto prone and looking to distribute crypto through their institutional channels to their retail clients. In Brazil, the regulator here, which is the CVM, does not consider government bonds securities. And for like many of my colleagues and professional investors around the world make the same face you just did when I say that, right? So that's an anomaly of the jurisdiction. And you can issue structured credits and tokenize them in Brazil and sell them just like as a non-security token, or like a token that doesn't need to be regulated under the CVM, which is the parent or the brother agency of the SEC, the Securities Exchange Commission here in in Brazil. So we first break it from where is the issuing being done, and what is the regulatory boundaries in that jurisdiction. Now, the second part we look at is, who are you selling it to, right? Or where are you marketing that token? And although, and this is another interesting thing about the industry, although I'm a big fan of the regulatory framework of the United States, which goes under the Jobs Act, very much, which is a framework that started in the Obama administration. Most token projects don't want to deal with the liability of issuing a token and marketing and selling it in the US, because technically, if you're doing that, then the SEC has no statute of limitations. And as we know, as history plays guide, the United States has an overarching arm and can come after you regardless of where you are in the world. So I think we take those two approaches. Well, where is the token being issued at, and where is the token being marketed to, or who is the token being marketed to? And then we make an assessment. But I think that we've seen a great amount of change. Jurisdictions that were more friendly in the beginning, like Cayman, are now being bypassed by jurisdictions that are more aggressive, like BVI or Bahamas. We're seeing jurisdictions that were very early on and very structured, like Singapore, continue to become a major hub in the global ecosystem. Switzerland has a very clear regulatory framework. And the US, if you're going to issue a token in the US and you're going to sell it to Americans, it's almost crystal clear what you can do.
Right. No, I think that's a great segue into not just the US entry point, but I looked into what the industry were doing, right? For example, at Portal Asset Management, when we look at the risk, the regulatory risk for every token, and how do we sort of mitigate that risk, both in terms of assessing the probability of a token being a security, for instance, and I at least look into something like what the industry itself has done. So in the lack of clear guidance around what a token could be, because not every token can be security, and there's always this debate that the industry has gone through. The industry itself, which is the Coinbases of the world, and many of the sort of notable names have come with this CRC, which is the Crypto Rating Council, as you know, which has given sort of a sliding scale to say, hey, if you're of a higher number on a scale of 1 to 5, for example, and you're sort of hovering between 4 and 5, most likely you're a security, and you ought to be treated that way. Now, of course, in this vast ocean of 15,000 plus different tradable tokens, that framework is simply hard to apply, because what Coinbases do as an exchange, they pretty much do everything. They provide they provide brokerage services. So you're sort of collapsing the entire what is a very decentralized and distributed capital market infrastructure into a single entity. So at some levels, I'm looking at this from a point of view to say, there is an irony in the fact that we are going after decentralized infrastructures, and you have the centralized entities who are doing everything. But at the same time, in absence of a true regulatory guidance, you see the CRC sort of frameworks, and you see DAX, which is trying to do what S&P 500 has done in creating indices, making life easier for investors. And I'm just looking at this from as an investor, as a technologist, to see how many funds actually have that acumen or actually follow that, or it's purely about numbers in terms of looking at a token and investment thesis that follows is purely based on numbers, or are we looking at this, external elements that actually has a risk impact on portfolio, whether it's regulatory risk or the risk of regulatory arbitrage that may prevent a fund from one jurisdiction but may flourish in another jurisdiction. So I'd love to get your perspective on CRC and DAX and so on and so forth, to see if you're actually employing some of those techniques as well.
We do employ some of those. Obviously, all the funds have a fiduciary duty of making returns for their investors, right? So we do see projects that we believe on, that we think are great projects. We're seeing a lot of things in the metaverse. We're seeing a lot of things in different protocols. Celo is a great protocol we're looking at. Solana is a great protocol. Near is a great protocol. We take an approach of being technology first and understanding the tech behind it. Nothing against dog coins or Shiba coins or Dog coins, but we don't carry those in our portfolio. And we just don't, it's not that I don't think that there is a community behind it, and not that I don't respect that community. It's just that we invest in things that we think has a potential for having a disruption or bringing a disruption to the tech ecosystem. So that's where we look first. Obviously, a lot of these projects can be considered security tokens by some jurisdiction or another. So it is kind of like more of an art and an ability to make a call. But what we're seeing is that as the industry evolves, the regulator is falling further and further behind. So now, if you look, the regulator is looking at like trying to understand what DeFi is and how to regulate DeFi, right? The industry is already like DeFi 2.0. What can I sell as a financial instrument on the metaverse?
Yeah.
So good luck for the regulators, and hopefully they can employ more people. But we just feel it's going to be challenging for the regulators to continue to follow the industry. So that's one of the reasons which we take a very much approach of like, what is tech and what is tech disruptive, and look at those projects. On the flip side, I think that the industry is separating. We're seeing more and more projects that are pure security tokens, kind of like tokenization of real estate. We're working with some of the largest producers here in Latin America to tokenize farms, industrial farms, right? We're seeing tokenization of minerals. We're seeing like financial products, yield products, bond products. Structured credits is something that we feel is going to be very strong in 2022. Where we're seeing this kind of like there is an inflow of institutional players like banks. Bank of America, for example, does a great job at now releasing a report, which is written by our colleague Allcash. So you're seeing this merger, and I think that as we move forward, the industry will continue to be disruptive and have projects that are kind of like you take that risk approach and you believe in the tech and you invest in it because you believe in the tech. And then you have another approach, which is like clear financial instruments that fall completely as a security token that are a financial instrument of democratizing access to previous investments that were not available for people like, for example, in Vietnam.
Which is really in what are they? I think they're the number one user outside the investor space in the world, which is really quite something. And so one of the things that I often sort of have a wry smile about is sometimes I think some governments in the world are racing not to be the last. They really don't want to be the first, and they don't want to be early, and their regulations are struggling to keep up, but they don't want to be the last. So you get this sort of unusual situation where all the economies are getting dragged up because one group becomes the most friendly regulation location in the world. And so therefore everyone starts going there. And another group realizes that they've over-regulated, so they've got to start making it regulation friendly. So do you think we're going to get situations where, people are going to establish their operations for the purposes of regulation in Estonia, by example, and live in the mountains of Bali whilst promoting into the USA? And this sort of borderless environment, do you think that's going to see a lot of the new birth of these STOs? Or do you think ultimately STOs are going to raise sufficient money to be prepared to regulate correctly within the domains of America as its first location?
That's a very good question, because I think it's a little bit of both, right? So let's take the US as an example. And I think it's an interesting thing to point to the US, and a lot of people around the world, when we go and do these panels and keynotes that I meet Nitin in Dubai or other places around the world, people kind of scratch their heads and are like, why does everyone talk about the US? Mm-hmm. Why is it so relevant to hear this nutty professor from UCLA? It's very simple, right? It's because like the SEC regulates 40% of global trade of financial instruments. It's just because 40% of the volume of financial instruments is traded inside the United States. So if you look at the like larger financial ecosystem, all the banks in Indonesia, all the banks in Singapore, all the banks in Brazil, look at the SEC to have a little bit of guidance of where 40% of the market is going to go, right? So if you look at security tokens, I think it's very clear of what you can do in the US. And I think that that will continue to lead the pack, because a financial institution will never play in kind of muddy waters or gray area, because it's just like not big enough of a market, right? At all-time highs, we've got like 10-20% of like the gold market, which is, you know, small compared to like all other financial instruments. Now, if you box that into regulated, tokenized financial instruments, I think the US is going to continue to lead the pack, because it regulates 40% of the institutionalized market. And simple as that, right? No more, no less. Now, if you look at the other side, which is a very good part of your question, is are people going to go into this borderless environment and flock around the world and try to find jurisdictions that are more friendly? That has been happening since day one, when the regulator, well, I wouldn't say since day one, but since January 2018, when the SEC dropped the hammer on all ICOs, right? And you're seeing that in the US. Like, all my friends, and I'm sure a good amount of your colleagues, moved to Puerto Rico. Why are they moving to Puerto Rico, right? Because it's just like a more tax efficient, friendly jurisdiction for people that do crypto. Short-term gains is like the basis of crypto. If you're going to live in crypto hoping for long-term gains, then you got to be a holder, right? Which is fine. I think it's great, but a lot of people day trade. So I think we're seeing that in the US. We're seeing jurisdictions becoming much more friendly and trying to rush forward. And as these smaller countries move forward, like BVI, like Bahamas, like Cayman, like Liechtenstein, you're seeing more relevant economies and countries following that path, not to be the last, like you said, you know, like BaFin is a great example. The German regulator, like very prone, very much looking into innovating. And frankly, Germany is one of like top 3 economies in the world. So I think it's kind of like a race to the bottom, and we're end up going to get to a space where it's going to be hard to regulate, just like it's hard to regulate the internet. It's going to be very hard to regulate tech development in the blockchain world. It's going to be easy for you to regulate financial instruments that are tokenized. That's going to be easy. But to regulate innovation in the tech space related to blockchain technology, I think that's going to be a hard feat from the regulators.
Yeah, absolutely. And I think I've always said this, that technology knows no boundaries, and it has no perspective on regulation and what countries want to protect, which means that if you don't want to use it, then you're left behind in terms of all the advantages that the technology has to offer. And I've also said, to your point, Alex, is that if we don't deal with the traditional financial instruments, right, which is USD or fiat or the banking system, then oftentimes the regulatory, so the college of regulators don't really have a strong hold on this, because let's say, for example, if we devise a system that your STOs, and I'll get to that in a minute, is traded only in Bitcoin and Ether, for example, as a truly liquid settlement sort of instrument in that crypto sort of ecosystem. At that point, how do you define what's a security, and how do you regulate it? Because you're not touching the banking rails, beyond touching the banking system. And at some point, because of the ubiquity of Bitcoin and Ether like instruments or layer 1 protocols that have become so liquid, and they have become truly global instruments, I don't know what happens at that point when we aren't even touching banking rails. We simply deal with these global instruments. And that is something which I always ponder upon, to say, one, it's borderless. Second thing is it's self-governed. Third thing is we aren't exactly breaking any laws, because we aren't touching the defined instruments. I think that's an interesting world if you simply envision and think about the whole world, that suddenly there's a little bit of lawlessness, but there's also the self-governed entities that the best will emerge, and the reputation itself will govern the proliferation of the certain assets, right? So just a thought, and I'd love to get yours and Deryck's perspective on that world. I do have a question on STO because you bring up an interesting point, and this is related to my previous comment. Is as an equity investor, for example, you're in venture and you're making these investments in entities who are doing structured credits, for example. But then you turn around and when they create an STO, and I'm just wondering, is the investment from both sides? What is the vantage point of an equity and a venture investing versus investing in the actual token and holding a token and trading those tokens based on certain metrics that market has to offer? Is there one advantage over the other, or is it advantages to have both because you have a venture investing on one side at the same time you want to promote the holding of these tokens and trading of these tokens because that helps your venture investing?
Yeah, so that's a very good point, and I think that the right answer is a little bit of a balance of both, right? And every investment is its own animal. For the audience to have a bit more clarity, I think that if you do a traditional equity investment and you get very early on, you're going to get a piece of ownership of that firm. So let's say you buy 10%, right? And as that firm continues to raise more money, either you get diluted or you follow on and you keep buying more to maintain your 10% share. And I'm sure that a lot of your audience, a large portion of your audience already knows that, but some people enter the space at different stages. So just to bring everyone to the same page. So if you do that, as a traditional investor, you ride with the company, but you're going to ride with the company on an average of like 7 years to see your money back or to see a liquidity point, right? So there's a big boom of now VC funds. I'm sure that you guys have been following this, right? Like the amount of growth. Like, good luck for the investor, because in this world, I don't know what's going to happen in 7 years. In 7 years, we might all be living inside the metaverse, and then like your dog food equity investment is worthless, right? So that's challenging in itself from the nature of investing in equity in early stage companies, because the maturity of your investment has a long duration or has a long horizon. The ability that boomed the blockchain ecosystem was for these companies to issue, let me call it quasi shares or common shares. So shares that you could trade on a secondary market that were not pendant to a regulated exchange. So if you think about that, we believe very much in tokens, and we like projects that we can get, in an ideal scenario, an equity piece and a token piece. The token piece, then it goes again into a variety of different instruments and how you get that token, but you have a liquidity point, right? So we invested in things like every other token investor. That token got listed at 5, went to 15, and now trades at 50 cents, right? We've all been there, we've all done that, but at least you have a liquidity point where you can get your money back. On an ideal scenario for people that are listening to us, I think that if you can get in and get a piece of the equity, with the notion that you're going to have to do follow-ons, so plan your cash flow to follow that firm, and also get a portion of tokens where you can reach liquidity at a earlier stage. I think that's the ideal scenario, and that's why you see some of these funds, some of these venture funds in crypto making such, like, 3 digits, 4-digit returns.
You're on mute, Deryck.
So Alex, in your book, STO Financial Revolution, I mean, you talk about really, obviously how to navigate your way through regulations and, to deliver a compliant product. Just as for those entrepreneurs listening, or for those that are thinking, I want to create an STO, or I'm interested in STOs, but what are the prime 2 or 3 things that are the showstoppers normally for an entrepreneur that's building a security token offering, that he just has to get past, the SEC regulations on the way?
Yeah, so I think that's a lot of value for the audience. So first of all, like, think about your project as two things. If your project is a project that the token gives the holder access to an ecosystem, you could potentially position it and qualify it as a utility token, which would be outside the boundaries of the regulator, right? So if your
Yes.
token gives someone access to an ecosystem like a blockchain protocol, then you could get a legal opinion and qualify your token as a utility, because the rise in price or the rise in value of that token would be driven by demand and supply of that token, not by the financial instrument itself or not by the token itself. On the flip side, if you look at your project and you say, my project is an investment project, people are giving me money with the belief that they are going to make more money, such as like a yield product, or such as kind of like buying an apartment in a building where the building is at ground and you're going to buy that apartment on the blueprint, and then the building is going to grow and you're going to resell it, right? So if there is an angle of people giving you money because they believe in your efforts to return more money to them, then frankly, that's a security token. With some anomalies, like in the Brazilian regulatory environment, government bonds are not considered securities.
Yeah.
Right? So you have to kind of like take those into consideration. But the second step would be call a securities lawyer in your jurisdiction. I highly recommend, if you're ever going to do either a utility or any tokenized project, have legal advice from a securities lawyer in your jurisdiction, meaning the jurisdiction you live in.
Yes.
Because that's the starting point. The second point is like, make sure that you have also legal advice where you're going to reside or issue the token from. And then the third point is where legal advice on where you're going to market that token. Does every project does that? No, but that's like the proper way of going. At least make sure you have a legal advice on where you're sitting.
Yeah.
So if you're sitting in the US, get a securities lawyer from the US. If you're sitting in Switzerland, do the same. If you're sitting in Japan, Singapore, do the same. And I think that the third aspect of it is really thinking about who your audience is and how you're going to distribute that project, right? Is your audience a pure crypto tech savvy person? Then find the right channels to do so and the right platforms to distribute that project. If your audience is a more kind of institutional, your grandparents trying to buy a financial instrument, that's a different space. But legal advice, I would say, is probably the most important thing.
The other thing that is and I think that's a very good point. And
yeah.
We also are talking about 40% of the markets you're saying are in the USA. So 60% aren't, but also that means that if you look at the top 20 countries that are already the great users of this space, which is Vietnam, India, Pakistan, Ukraine, Kenya, Nigeria, Venezuela, etc., before you even get to the USA. I wonder whether these particular nations, Alex, are simply turning around and going, SEC regulation, fascinating, not relevant to my marketplace. My marketplace wants this. And you're seeing the developing countries maybe not embrace the SEC regulations, or is that not the case, do you think, Alex?
No, I think that that's exactly the case. And that's why you see 80% of the projects that are very promising projects being what we call ex-US. They don't take US citizens, right? Yeah. If you go do the KYC and there's like a drop-down menu, like, where do you live? USA, yeah. Then you get like a big like red screen and your IP is blocked immediately.
You're not feeling the love, really, are you?
Yeah, you're not feeling the love. Like I'm a proud American, but it's challenging for Americans to navigate the crypto ecosystem. Like we're getting close to tax seasons for those who are listening to us from the US and our US citizens. If you look on the web, every single major player, Coinbase, Gemini, the major funds, even Grayscale. Like yesterday, I received a full report from Grayscale on how to treat your taxes. It's a nightmare. You got to be an engineer like Nitin to probably understand how you're doing it.
Exactly.
It's like beyond my capabilities.
And there's very few Nitins in this world.
Yeah,
and
you're selling yourself, Alex. I think you're brilliant, and I've heard you speak, and I've heard you opine, and I think I think it takes all. It takes a good thought leader, a good engineer, a good business person, and certainly a good professor, if I may add that.
Good on you.
So, but this has been great. I think we can go on for hours, Alex, and I just want to be respectful of your time. And I think this has been, to me at least, we've talked a lot on blockchain and where the industry is heading and the much larger picture, but going down to the path of STOs, I think today was a fairly rich conversation, both in terms of your global perspective that you bring. So, thank you again for your time. And I'm sure, I don't know if you're going to Dubai in March, but if not, then we should certainly meet there and catch up again.
Yeah,
Deryck,
no, my pleasure. Thanks so much, Nitin, Deryck. It was a true pleasure to be on your podcast and anything I can do to the audience, I'm happy to help. You can find us on LinkedIn, Alex Nascimento, UCLA. I'm the black and white picture, or also Instagram at 7cc Invest. Happy to continue the conversation.
Good on you, Alex. Greatly appreciate that, because that's going to be very important. The audience does like to connect with, and I think today is really the introduction you did is a mouthwatering introduction to what this space is going to be. I mean, you're talking about the biggest asset classes in the world are securities. And so tokenizing them means that you're tokenizing the biggest asset classes in the world. So it's a very important topic. And thank you so much for coming on board. And hopefully we can do this again sometime along the way. Greatly appreciated. And Nitin, I didn't mean that business about missing you, not missing you.
Okay. Well, thanks again, guys. Take care.
Good on you.
Bye, Alex.
Bye for now.
Safe travels, Alex. Bye.
Bye.
We hope you enjoyed our weekly conversation. If you have any questions, comments, or suggested topics, please feel free to connect with either Nitin or myself on nitin@portal.am or Deryck@portal.am. Feel free to subscribe and share with like-minded friends. Stay well, inquisitive, and engaged. See you next week. Bye for now.